Welcome to our HaloHealth podcast. We are a physician-exclusive angel investment group that advises, connects, and invests in disruptive healthcare ventures. My name is Ruben, and I'm an oncologist and a HaloHealth fellow. Today, we will be interviewing HaloHealth member Dr. Nick Yardley. Dr. Yardley, I'm so happy to have you here today.
I'm glad to be here.
Awesome. Can you start telling us a bit about what you do in general? How is your day-to-day work?
No problem. I'm a fellow-trained orthopedic surgeon. I focus my elective practice on sports arthroscopy. So really arthroscopic management of pathologies of shoulder and the knee, with some additional soft tissue procedures that I do. But I run a fairly unique practice in that I'm a full surgeon in our community. I live in Orangeville, Ontario, so about 30,000 people with a catchment area of about 100,000. So it's pretty busy. And so I've sort of had to adapt my practice to meet the demands of the community, but still be able to tackle, the challenges of my elective practice. So to sort of summarize, I do a fair amount of community-based orthopedics as well, but a fair number of the additional traumatic operative procedures actually get sent out to other institutions.
Gotcha. And what got you interested in healthcare startup investing?
Yeah, I think everybody at some point in their life, I think, looks for diversification in their interests and what they do. And people pursue that in different capacities. A great example would be, family and what you do with your family, or maybe recreational activities. But from a professional interest perspective, and also from an investing perspective, I think there's a lot to be gained by trying things outside of kind of your comfort zone. And so, within medical school and residency, you're probably pretty familiar with how it's very focused on learning skills and knowledge about our practice and medicine, but very little in trying to understand, making money, investing money, running businesses. I mean, it's probably a bit of a side discussion, but even the schedule of benefit and how that's used is not really taught until you start day one of practice and you realize, oh, how does this all work? So I guess it's a bit of a long answer, but the reality is I think generally people seek to try to do new things and to challenge themselves. And so for me, I had been interested in investing in different capacities. Some of the traditional investment concepts of using brokers and stock markets and, aspects of things like real estate. But this sort of was an interesting niche. I had done some private investing outside of healthcare, and was really relied on other people's knowledge base to help determine what may or may not be suitable. And so it sort of was a natural fit that in the progression of my interests outside of my practice to kind of work in this capacity and invest in capacity. And I always talk about voyeurism. So I think there's like some voyeurism that can go on with these sorts of opportunities. So really like looking into what other people do. Like if we're talking about HaloHealth specifically, I think sometimes people feel intimidated, like that they have to spend a whole bunch of money and invest in a whole bunch of things. But what I often tell them is like, just show up and listen, like learn, and there's no real commitment to have to invest anything. It's one of the unique things about the way HaloHealth works and the angel investment group that they've created is that a lot of angel investment groups require like essentially a group buying where you put in a certain amount of money in it per month or per year, or you sort of buy into their investing philosophies, whereas HaloHealth takes a much more passive role in that regard, and you can invest as much or as little as you want. And so there is the opportunity to invest money. There was the opportunity to learn, and this concept of voyeurism, which was really to try to understand like what people are doing and how people approach things. And I feel like HaloHealth is really a great incubator for knowledge, obtaining knowledge in this area that, once again, like we really don't get any um, formal education in for, well, whatever, almost a decade and a half of education, yet none of this is really talked about during our training.
No, I completely agree with you, and I think that's one of my frustration when it comes to medical training. It's we get taught so much medicine and things that we don't really need and we don't use in the clinic, but no one teaches us like how to manage money. And beyond that, I think how the business of medicine is conducted. As a physician, like it's very important to understand like what drives innovation, who is the payer, who is the user, who is the customer, why an
Mm-hmm.
innovation can work and why not. Because like you are the one who can drive this needle and you are the one who can decide if an innovation is useful or not. And I completely agree. I would echo that too. Like it's something that I was introduced to over the last year. And like, we have our Facebook groups and we talk about a lot about stocks and playing it easy over 10 years, which is like safe. And I understand that where the safety comes from. We talk about real estate, but no one talks about investing in startups, and especially when it comes to startups in the health tech space. Like this is our workshop, the hospital is our workshop, the clinic is our workshop, right? And we know what will work and what won't. But anyways, I don't want to talk about this. I can talk about this for years, but like I want to go back to you. You mentioned HaloHealth. Can you tell me like how did you hear about HaloHealth?
Yeah, so there was a medical startup that was raising money through um, different angel groups. And one of the angel groups was out of Niagara, where my family is. And so my father was a part of that angel group. And I think there was probably some information transferred between the two groups. And my dad said, "Hey, you should check this out." And so I did. And then I thought to myself, "Oh, this is sort of an interesting opportunity," and sort of took it from there. So it was a deal, I think, that both HaloHealth investors and the Niagara Angel Group had invested in. So I think that's how it originally happened. And then it turns out that a number of the founding members of HaloHealth are actually know quite well, because a number of them either went to my medical school or were at sort of same residency years in Toronto with me. So I actually knew a number of the founders, so it seemed like a bit of a natural fit.
Cool. And you mentioned earlier like how HaloHealth works and functions and how it is different from other angel investment groups. I would love to hear your thoughts. Maybe you can expand a bit on this. Maybe you can tell us like, or maybe you can expand on the point where you can comment here and you don't have, or you are not obligated to invest
What's the question? Sorry.
about your experience when you mentioned earlier that HaloHealth is different than other angel investment
Okay.
groups. So,
Yeah,
what do you mean by that?
sure. I mean, I think there's a number of things. The first is generally like physicians are really busy, and so like physicians rarely meet outside their practice in really any capacity. So I think that's because the opportunity cost of our time is so high, and so to organize a group of physicians very difficult on any level, period. And so it's what Halo Health has done has been pretty unique, has been able to sort of generate so obviously a subset of physicians that have some interest. So there's a bit of a selection bias, but a group of individuals that are willing to dedicate a surprising amount of time um, is, I think, kind of unique to Halo Health amongst almost any organization when it comes to physicians. The buy-in physicians is surprisingly good when it comes to their time, and time is obviously their greatest resource. So I think that makes Halo Health pretty unique in that regard. How they've done that is probably pretty complicated. But I would say that, they've created a system that's pretty seamless. It's user friendly. The events are very focused. They do a lot of background work that they don't require physicians to do. They've made a real uh, strategy to uh, facilitate physicians when it comes to remuneration, with becoming like experts in helping provide mentorship to these companies. They sent me a few books the first time I signed up, and they're actually pretty good. They allow just to become involved in a number of what's called incubators, like TNT and Spring, free of charge. So some of those upfront fees, you're kind of like, oh, do I really want to get involved in this? But I got involved in both of those programs because of HaloHealth, and our fees were waived for both of those. And so I feel like HaloHealth has made a good argument to become involved because of how they facilitate a number of different opportunities. And then, like, from a pure like investment perspective, this is not lost on me. The thing that actually I think excites me the most about HaloHealth, that I have a hard time articulating to people, is this concept of like group thinking. And the analogy I like to use is in Who Wants to Be a Millionaire, when they poll the audience. And when they poll the audience is rarely an expert in that particular question, but the audience is surprisingly good at getting the correct answer. And it's just sort of like general knowledge or general feeling for a question. And so, like, imagine doing that same thing, but now taking people who are actually relatively well versed or have reasonable knowledge in companies, and asking a whole bunch of physicians what they think about a company or what they think about an idea. Like, I think this is like a very powerful way to generate a sort of a group thinking amongst physicians that would be very hard to obtain in any other capacity. And it comes down to the opportunity cost of physicians' time and all these other. It's the ability to have all these physicians kind of thinking simultaneously about something, and then on top of that, you get the experts in the fields.
Yeah, I completely agree with that. I think that's what excites me also about HaloHealth. So like, I joined HaloHealth as a fellow, and I didn't really know what to expect. So as a fellow, I wasn't required to pay upfront fees. I was just required to come and learn and participate with my expertise. So every call we join, for those people who don't know how HaloHealth calls function, and I think it's a great model where like there is a startup that pitches, and usually there are like at least 15 people, 10 to 15 people attending, and there are people from different backgrounds, like physicians, PhDs, patient, or people with from a biotech backgrounds, hospital administrative background, and we all listen to the pitch. And eventually, after the pitch is done, we ask the founder questions, and then we do debrief after the founder leaves the call. So that's a very short way of explaining how the call works, and I find it very useful. I always tell like other people about HaloHealth is just like an MBA on steroids. It's literally understanding the health tech world, what works, what doesn't work, and the most important things that makes innovation to be adopted by other people. Because like on each call, you have at least 2 or 3 physicians, PhD candidate, PhD students. So it is very, very useful. You mentioned also about the companies or maybe we can shift gears and talk about the companies that you invested in HaloHealth. What excites you about them?
Mm-hmm. Yeah, I think it's that's a great question, and it's a difficult one to answer because there's probably a number of pillars that go into like the foundation of making a decision for me about investing in a company. And some of them are probably obvious and some are maybe less obvious, but those 3 pillars that come to mind really are: number one, we're doing this to make money. So, I think investing, by the nature of the beast, is you're putting money into something and hoping that it's going to mature into something bigger. And so obviously it's nuanced as to which companies you think will and will not be successful, but the decision around which companies you want to invest in obviously need to be based on some general investing philosophies that you have, like how much risk you're willing to take, what's your event horizon. Really, at the end of the day, I think what you're trying to understand is what's the sort of upside downside of each investment, and you're really almost like assigning like a percentage to those. That's how I kind of like to look at things. So like, what's the downside risk and how do I compare that to the upside? There's also some pretty critical things, like everybody knows that the majority of these actually do fail. And so like, what things are in place to reduce those risks? And one of the more important things is the founders. So often investing in founders, I think, is pretty important. And the other thing is this concept of burn rate and how much money they're using, and how much runway they have with the money that they have. So these are things that I'll often look at. I also am always pretty interested in how much money they've raised previously and how they've done that, and over what time frame. It gives you a better sense of sort of how true they've been to their planned growth and how much money they've run through during that time period. Also, some things like non-dilutive funding would be some examples of things that I kind of look at when looking at downside risk. And then the upside is really trying to understand really a couple things. The first is actually what their exit is. So sometimes you see these products that you think, oh, this product could be worth 1,000 times what they're valuing it at today, but perhaps the more likely scenario is that they're going to exit earlier. So understanding like what their exit plan is, and then on top of that, understanding what the dilution is going to be before their exit. So even though a company might be valued at, say, like 10 or 100 times what it's valued at when we're investing in them, if it's significantly diluted along the way, your actual investment may not increase by 10 or 100 times. It can actually be a lot less. And so understanding these sorts of things, I think, are some of the things that I think about when thinking about the upside versus the downside, and trying to create an equation in my brain that says, oh, I think the benefits outweigh the risks. And so that's kind of one pillar, the concept of making money. And then the other pillar for me is this concept of voyeurism. And so like for me, I try to stay in touch with all of the companies that I'm involved in. Generally speaking, when you're investing in these early startups, there are actually part of the legal agreement that there's information rights where technically you're supposed to be given the same information that other investors or subsequent VCs get. But at the end of the day, like nothing beats having a relationship with a founder or their company, and where they're actually sending you information along the way of how they're maturing. And I think they really do appreciate the investors reaching out and sometimes giving advice, and sometimes even saying, hey, like, I don't have the right advice for this, but maybe check out this. I find one of the ways to foster that relationship is often I'll send them stuff. So I'll be like, hey, I saw this other company that seems to be doing similar things to you, or I just saw this today and I thought this may be related to what you're doing, or something like that. So the second is this concept of learning. Like there's this opportunity to learn with the company as they grow, and that's a really unique opportunity because you can sort of get a feeling of being a founder without having to deal with all the stresses and the economic realities of spending all day, every day working on a startup. But you can still get this concept of voyeurism of seeing what they're doing and learning from what they're doing, and potentially even learning from their mistakes. And so there's that kind of learning component, which I think is pretty exciting. And I think the truth of it is it depends on what drives people. But for me, when I've invested in a company, I'm much more likely to be more involved and listen and learn more than I would be if I was otherwise. And so it's actually sometimes when I think about investing in a company and I think like, oh, maybe I'll just do a little bit of an investment, but that really doesn't fit my investment thesis, which is like, if I'm going to invest in a company, I'm investing it because I believe in them. And if I believe in them, then I should be investing a significant amount of money. And so for me, I've always felt pretty strongly that if I'm going to invest, I should invest enough that it matters, because naturally that makes me more interested and more likely to actually learn, because once again, that's one of my pillars, this concept of learning. And I think it's more likely to learn if I'm more invested. And then the third pillar is an interesting one for me, which is this concept of actually like making friends. And it doesn't necessarily need to be on like an absolutely personal relationship. It could actually be on a more professional business relationship. And some people might argue that muddying those waters is maybe a bit dangerous, but I've found outside of angel investing, some of my best friends are also my business partners, and I found that very fulfilling. And so I feel like there's actually an opportunity in this capacity as well. We're starting in like very early startups who they don't have a cap table with a million investors. Like you literally are sometimes the first people on their cap table beyond even friends and family, or sometimes you're even part of the friends and family around. So like you really are like one of the founding investors and really the founding members of the company. And so there's an interesting opportunity there to create relationships with individuals. And so I've had the opportunity to create some pretty strong friendships and relationships with a number of founders, not only through this healthcare investing, but also some other private investing that I've done. And I think that's really exciting, because if you're meeting like-minded people, you never really know how those relationships are going to evolve. A number of private equity placements that I've made have led to other private investments, because I've met a founder and we've created a relationship, and then they say, hey, like, I'm really excited about this company, like, check this out. And I'll end up investing in that. Or a founder will have founded a company. I'll give you kind of a random example that's outside of healthcare, but started a rocket company. So essentially they were planning on shooting rockets into space to transport satellites. And he ended up ultimately leaving that company and starting an agricultural-based company that works on the mycelial networks and how plants communicate amongst one another. And so I would never have been able to be an investor in that company if I hadn't created a relationship with him and was able to invest in his friends and family around. So, but the bottom line is that I feel like this friendship part is not for everybody. And it doesn't have to be like buddy, let's go out for dinner and drinks. But there's also this opportunity for a professional relationship, which I think is an interesting opportunity. To give another example, one of the early startups that I invested in, he was recently traveling in Ontario, and so he actually came and stayed up for a night at my cottage. He brought his girlfriend, and I felt like creating that personal link was really exciting. And I guess the other point that I would say is that these sorts of things, I think, bring kind of like a youthfulness to myself, like with the way I think and the way I approach things. And if you're investing in founders that you believe in, they generally have a lot of energy and are very dedicated and very focused. And so I think you can absorb some of that through osmosis, and as you're sort of living the highs and the lows that they're living, you can sort of feed off of that, and it can create a lot of reward in your own life.
Yeah, I completely agree with you. I think that's this is a great answer. I think that's what also excites me about investing in startups. Is like it's investing in people. When you invest in startup, there are three things usually I look for. It's like the people, the product, the market. This is my screening criteria, and most of the time, like it's the person, because like that person either will make it or break it. If they are really resilient and they can like stand up after every hit, because it's not easy creating a company. So that's someone you would trust with your money, especially like if they are really someone that you work with on the long run and you create that close relationship. But as you said, I don't think that having that close relationship for everyone, but still, I think it's very, very, very rewarding. And I think we as physicians in general, like we are like we like to be around people. Like we went to medicine, most of specialties, like you deal with patients, right? So yeah.
I think it
I want
also
to
like,
shift gears.
sorry, just to
So a
another.
bit talking about advice to other MDs. What advice would you give to MDs or your colleagues who want to invest in healthcare startups?
Yeah. So I mean, start low, go slow. Start slow, go low, start slow. Um, like, but it's kind of like you could have asked me like, how would you encourage somebody to start running? It's like at some point you got to buy a pair of shoes and take the first step. Like that's part of the battle, and often the first step's the hardest. So, I think at the end of the day, it's like if you are interested, then at some point just take the leap of faith and try to do something. I mean, um, I think at the end of the day, like any decision, there should be reasons why you're doing it, and then you have to make sure that you sort of have a checks and balances that you're sort of meeting those reasons. Um, I think potentially a shortcoming of physicians, but also anybody in general, would be this sort of concept of if your sole goal is make money fast, then that might be one of the reasons to do it. But if it's the only reason, it's probably um, a bit dangerous because one of the major reasons is, first of all, you can lose money fast too. The second thing is that the reality is these are private companies and they're early startups, and so it's not like the stock market where you can check the ticker on Monday and see if it's up or down, or look at comparables in the real estate market and understand, whether the value of your apartment building's gone up or down, or even just run a cap rate on a commercial property. Like these companies often evolve over years, sometimes decades. And so it's actually quite difficult to have the feedback on whether or not your investments are actually appreciating or not. I guess that'd be the other point, is you have to have a pretty far event horizon. There's also some challenges with liquidity. So even if companies are clearly profitable and clearly are worth a lot more money than you originally invested in, these aren't liquid assets and you rarely can borrow against them. And so liquidity is another issue. Um, so my advice is to kind of go in with eyes wide open and understand these are not conventional investments. And although they can be very rewarding remuneratively, they also have their inherent challenges. And so really you need to understand how this investment vehicle is quite different than the vast majority of other investment vehicles that you're investing in. Um, I guess just this concept of like risk reward, or I think from a risk perspective, these investments on a compared to the vast majority of investments that people are investing in traditionally, or would be considered very high risk investments. Um, I sort of ironically don't look at them as that, but that's maybe a much more complicated discussion. But at the end of the day, one of the ways to reduce the risk is to diversify across a number of healthcare startups. And so that'd be my other point, would be if you go in with an investment philosophy and you're willing to invest a certain amount of money, that generally speaking, even if you're super excited about a small handful of companies, I would spend time investing in a number of them slowly, and then sort of potentially can increase your enthusiasm beyond that. Um, what else? Oh, another point that I would make that I think is fair to say is that physicians generally have been very successful in their lives, and they got into medical school, and generally speaking, they've got through medical school and are running successful practice. And so traditionally, they've been very successful at the majority of the things they do. And I think sometimes it's difficult for physicians in general to realize that doesn't necessarily equate to other things in their life, including investing in healthcare startups. And so it's hard to be humble, but this is an example of somewhere where, like, the more humble you are, probably the more successful you'll be. So relying on other people's knowledge and really trying to foresee your own shortcomings when it comes to, say, for taking on something new is probably critically important to have longevity in this game, because I think at the end of the day, the most successful angel investors are the ones that have done it for decades. And so if you see it as being like a marathon, and that every step along the way is literally a step in the marathon, is probably a good way to look at it. I'm not sure if that answers the question, but those are some thoughts I have. Um, and yeah, I mean, I think tackle it a bit like a new project. I mean, if you're taking on running and you run once a week for a short period of time, you're not going to become a great runner. Like, you have to decide how much time you want to invest in this process. For me, that means trying to get involved in the events, reading the books that were sent to me, sourcing out a fair number of just simple YouTube videos. I work out a lot, but I watch a lot of YouTube videos when I work out. And a lot of those have to do with investment strategies and different philosophies when it comes to healthcare startups and angel investing. Every person I meet or talk to, one of the things I often will say when I finish our conversation is, please send me anything that you think would be interesting. And the worst case scenario is I don't read it or don't open it up. But the truth is that if you create a back and forth with that knowledge sharing, you start to realize there's certain things that are like surprisingly rich in information that only take 10 or 15 minutes to read. And so I have a ton of newsletters that get sent to me. I always read every quarterly update that these companies send. I think engaging them and asking questions are important. So there's this, if you want to do it well, you get what you put into it. And so at the end of the day, if you're doing this to make money, and if you're doing it for the long run, then the more time and effort you put in early on, the more likely you are to be successful in it.
Yeah, I completely agree. And I really love your analogy about, like, if you're gonna run, first walk. And that's how it starts. I think if people are in medical school residency, that was one of my mistakes. I didn't wait, or I did not learn or work on my financial education, thinking that, oh, I'm in residency, I'm not making enough money, why I should care? And then closer to end of fellowship and training, and when I'm attending, I was like, oh, I should learn. And then I realized, like, no, I could have done so many things, even residency, by just acquiring knowledge. It's like we go through medical school, at least like between medical school and residency and pre-med and med, and at least 10 years, if not more, to treat people. But we don't spend half of that on learning finance before investing our money, which is sad. I think as physicians,
it's insane.
Yeah,
it's totally insane. I mean, there's a lot of historical appeals to tradition. There's a lot of taboo. It's insane that education programs that literally span 4 years and 5 years, and in some cases more, essentially dedicate zero time to any of this. It's mind-boggling. No other industry that I'm aware of sort of follows a similar path when it's such an important thing. And this is why it's kind of like the NBA. It's kind of, I was going to say the NBA. It's being stigmatized. The NBA for professional athletes. Like, it's unbelievable the number of professional athletes that do so poorly from a fiscal perspective. And I feel like it's like almost worse with physicians. I mean, it's unbelievable the number of physicians that you hear the stories, right? They're working into their 70s and 80s for the wrong reasons, or there's financial ruin, or all of these things. I mean, I even know investment people who want to pitch to physicians because they know they'll write big checks and not ask questions. Like, it's like they're like easy targets, low hanging fruit when it comes to raising money. And so, yeah, I don't know what the solution to that problem is, but it's something that I've actually thought about quite a bit. There's also this idea, and I don't know if this is beyond this podcast or not, but like, physicians spend like well over a decade and a half of their life being relatively poor. I mean, there are hundreds of thousands of dollars in debt. Yet, because of their education and the profession they're in, the social circles that they're normally in are normally at least relatively affluent. And so the majority of our friends, and we'll call them colleagues outside of medicine, are well into their careers by the time we've actually are getting our first proper paycheck. And so we've missed out on well over a decade of paying off debt, and a decade of making money, and a decade of all these other things but we have this sort of like sense that we should be similar to them when it comes to just simple things like going on holidays or buying cars or living in houses. Like, I feel like the burden of our education and the pain and agony we go through, we sort of feel like this need to like have something that sort of symbolizes like we've got there, or we feel like we should be uh, we deserve something. And so naturally we get into this sort of death spiral of things like debt and bad investment decisions and all these other things. And so it's this sort of perfect storm of all of these things lead to physicians making really unhealthy fiscal decisions early on in their careers, which makes it only even worse that there's very little education given about it. And so this is something I actually feel pretty passionately about. And it doesn't mean that I necessarily have a solution to the problem, but I think it's a real problem.
Yeah, I completely agree with you. It's like it's more than um, it medical education. Also, I think the part of it we don't talk about, and again, I think it's beyond this podcast, but like it leaves a toll on your soul. By the time like you are done with your medical education, and like you don't have the energy when you go out with your friends to enjoy life as you did in your 20s, but you spend your 20s learning. But yeah, I think, and that's why physicians should be more aware, and like we should create more bodies or more organizations like HaloHealth, where physicians like learn about innovation and how to invest in innovation. And it is the things that I learned during those meetings, it helped me also like when it comes to understanding the stock markets, how it works, how companies like, I think understanding startups is like, because Apple was a startup at one point, Tesla was a startup at one point. So it is really nice to see the transition from a small two people company to something that achieves IPO and is traded on a public market.
For sure. Yeah, I think one of the things that is really underappreciated is the value of understanding the language of startups and of business. And that jargon, it's not dissimilar to medicine. That like once you learn the language and understand the jargon, it's like half the battle. It's like you fly to Italy and you don't speak Italian. It's like your first few weeks or few months there. It's as long as they don't speak English would be, you can imagine, like almost horrific. It's like the same thing. Like we're not taught any of this jargon, and so half the battle is just immersing yourself. It's like this is the osmosis component of this where you like literally you're just sitting there and you're learning continuously, whether it be acronyms or names or words. Like I still all the time I'm Googling things when they show up in pitch decks. And it's unbelievable how like quickly you learn when it's embedded in a topic that you're interested in.
Yes, I agree.
And then add in a little bit of stress of like, I'm going to invest money in this. It's like your knowledge retention under those circumstances is actually surprisingly better and higher. And so,
yes,
yeah, I think it's, a lot of physicians talk about doing their MBA, and the vast majority of my friends are like, oh, don't do your MBA. And it's like, for me, it's like, I don't know, like, I think that part of the MBA is like learning the jargon. So there's other ways to do it. I think HaloHealth is a great example of that. It's sort of like a fast track way of doing it. But I think what these people who say, oh, don't go do your MBA or are missing out on is that it's like just part of the culture. It's a language and culture. And so it's a hard thing to learn without being embedded in something.
Yeah, I completely agree with that. Thank you so much for your time. I know it's almost end of the day, and you are doing this after a long day at the clinic, so I don't want to take more of your time. Thank you so much for being here today, Dr. Yardley. Appreciate it.
No problem. Yeah, I think this is an exciting time for HaloHealth. And it's a fairly exciting time for even healthcare startups in Canada to begin with. It's something that we didn't talk about, this concept of like the Canadian versus American healthcare startups and how they integrate and that sort of thing. But for what it's worth, there was really like a boom for healthcare startups that was only just a few years ago, where companies were demanding impressively high valuations, and being able to raise money quite easily. And there was almost a frame shift that probably related to COVID and some of the things that happened around that time. But there was a frame shift where it went from maybe some of the best time that the industry has had in decades to maybe close to some of the worst time that they've had. And so there's some real opportunities that have I think been created out of that. And so we're really at a time right now, I think over the next few years, where there's an opportunity that really hasn't been seen for quite a long time. It's taking a while for startups to realize how the climate's changed, but it's obvious that it has. And so to sort of keep it simple, there's a lot of really good deals out there right now that really de-risk the money that's being put in by physicians early on in these startups, because at the end of the day, we're getting a better deal. So if somebody's looking for a boost to be enthused to get into something, it's like the house market just had a correction of 30%. Like now's the time to look at investing in real estate. So I feel like there's actually an opportunity right now. There's been some tough times the last couple of years, and it is I feel like we're really starting to make a bit of a frame shift now. And so yeah, if people are interested, I don't know if this part of what this podcast is about, but if physicians are listening to this, once again, remember the first step is the hardest. Just sign it, go to one of the HaloHealth meetings. There's one about once in every two months. There's no obligation. You don't have to see anything. You don't have to put your video up. You don't just watch it for 2 hours while making dinner and eating dinner, and see if it's something for you. So HaloHealth's strength is the power in numbers, and the more physicians that are involved, the better it is for everybody. So I encourage people to get involved as little or as much as they want.
Yeah, and even for people who are still like a medical school residency or even beyond, you can attend the meetings
100%,
that we do on a weekly basis,
1000%,
2 or 3 startups at least, if not more.
100%.
So yeah.
Yeah, it's interesting that you say that. Like, yeah, absolutely. I mean, it is physician only. There's a bit of leeway, but it is more MD focused, with a new exciting opportunity for dentists. But at the end of the day, yeah, I totally agree with you. It's like almost like there's an opportunity here where it could be an actual interesting module in a medical school is to do just due diligence on a startup company. It'd be a really interesting opportunity. But yeah, I agree with you completely. There's almost no downside to signing in for a couple hours into one of the HaloHealth meetings and see if it's something that might whet your appetite and get a bit more involved.
Yeah, I completely agree. And I can talk about myself. Like the things I learned over the last year, like are enormous. And as I said, it's like an MBA in healthcare on steroids.
Yeah. Yeah, and I think those 3 pillars still go back to me. Like sometimes like one pillar is stronger. Like I'm gonna make tons of money off this, or I'm gonna learn so much about this, or that the concept of like meeting people and making friends. Remember, you don't even have to invest to do that. Like I just had a startup founder contact me this week about something that he's doing. I never invested in their company. I just said, hey, can you keep me in the loop of what's going on? And they are raising more money. And of course, he's asking for more money. I said, I'm not interested in it, but can you please stay in touch? And I wouldn't be surprised if he does. And so you don't have to invest in to actually take advantage of a lot of these things. That includes meeting people and making friends and that sort of thing. So I had another startup founder approach me at the end of our last meeting, and we ended up spending 45 minutes talking about not only his company, but a whole bunch of other things that have to do with nutrition, and post-operative care. And there's another sort of relationship that's been created that has nothing to do with investing. Like I told him I didn't want to invest, and at the end of the day, there's still a lot of opportunity even for those that are not investing. So to echo your thoughts, I think if you don't have to be a physician making a whole bunch of money to invest a whole bunch of money, you can be a medical student with just looking at being interested in this. And I guess there's one last point, which is in a lot of us, there is this potential opportunity to become a founder of our own at some point. And what better way to prepare yourself to potentially be involved in that, because you never know when you're going to run into a great idea or a new technology that you think could become, the foundation for a startup. Like, what better way to have matured yourself before doing that? And so this is almost like preventative medicine in some respects. Like, if you think there's any opportunity that you might in any way be involved in any of this stuff in the future, getting involved early will only make your life 10 times easier later on. And so that would be the other point I would make, is that this is a really good opportunity to protect yourself from having to learn a lot of stuff really fast in the future. A lot of founders are also taken advantage of because of their lack of knowledge in this area. So why not prepare yourself even before the opportunity arises?
Yeah, I completely agree. And I think it is a question I ask myself a lot, since we're talking about it, like being a founder versus being an investor. It is very exciting to be a founder, but also like you have to know what you are doing, because like usually people like who are founders in healthcare, like they have some tech background, friends in the space, like at least some knowledge. And I've seen pitches by physicians who are trying to bring a technology to life. And it is usually like different than the pitches that you hear from people with tech background. And like it's obvious that unfortunately that physician founders, they are great founders, don't get me wrong, but in the early in their career, since like they are working on their clinic, on their like job, and also they're trying to found another company, it is very hard. Like they don't know how to pitch, they don't know the numbers, they don't know how to sell the idea, despite that they might have $1 billion idea. So that preparation.
Yeah, no, for sure. Yeah, physician founders are like the best and the worst of the spectrum of founders. They literally are on both tail ends so yeah, I totally agree with you. Physician founders are very tough, but they also have some of the best opportunities. So often very knowledgeable and often are have ideas that are obviously thought about a lot because it's intimate to their practice, generally speaking. And so
exactly,
it's generally speaking, even if they're not going to be successful, they have a pretty interesting idea.
Yeah.
Awesome. Well, I'm very happy to do this, and I'm very happy to do it again. This goes maybe without saying, but if people contact HaloHealth, there's always an opportunity just to talk to physicians about their experiences. And I've talked to many physicians in the past who have some questions and want to, maybe dip their toes a different way. And so anybody who's listening to this who says, "Hey, I want to talk to Nick and ask him some more questions," within the limits of my time, I'd be happy to have those discussions. So I'm happy to be somebody that if there's somebody who's interested in HaloHealth and have some questions that they want to ask me directly, I'm happy to talk to them.
Amazing. And we will make sure to leave your contact info as well, or people who want to talk to you, they can contact us and we can send them the info as well.
Yeah, exactly.
Okay. Awesome.
Awesome.
Great. Thank you so much for your time.
My pleasure. Have a great evening.
And you too.
Take care.